It feels like every time you blink lately, there's some new development shaking up global trade, and China seems to be right there in the middle of it all.
Yeah, absolutely.
We're seeing shifts, changes in alliances. It's a lot to keep track of.
It really is, and that's exactly why we wanted to do this deep dive today. We're focusing on, one of the biggest pieces right now, these recent very sharp tariff increases on goods coming out of China.
Right.
And we also need to look at how others are reacting. Think the EU, India, what are they saying? And trying to get underneath it all, the reasons why, with China really at the center of the picture.
Absolutely. And we've pulled together quite a bit, news analysis, statements from political figures, business perspectives too, trying to get a clear view of what's really going on with China and why it matters so much right now.
So our mission, if you like.
Yeah, let's cut through the noise, deliver the key insights on these China-focused developments, and really understand why we should all be paying attention.
Okay, so where do we start? I guess the most attention-grabbing news has to be the tariffs themselves, that huge hike.
Right. President Trump announcing a 125% tariff on goods from China. I mean, that number alone makes you sit up and take notice.
Definitely.
But maybe we should rewind a little just to get the context. This didn't just happen overnight, did it?
No, not at all. Good point.
Yeah.
Earlier this year, you had those two smaller 10% tariffs back in February and March. Those were specifically about fentanyl precursors, a very targeted issue.
Okay.
Then things broadened out. There was a 34% tariff on Chinese goods. China immediately hit back with the same amount, 34% on U.S. goods. Sort of the classic tit for tat we see in these situations.
So the opening shots, basically.
Yeah.
And then it escalated pretty fast after that.
It did. China retaliated, and then President Trump gave this one-day ultimatum, drop your tariffs or face another 50% from the U.S.
Wow.
China didn't blink. So that extra 50% tariff was added, which brought the total U.S. tariff rate up to 104% on those goods.
Right.
And predictably, perhaps, China matched it again. Another 50% levy on U.S. goods entering their market.
Which brings us right up to yesterday.
Yeah.
And this headline number, 125%. Now, just to be super clear, this isn't another 125% on top of the 104%, is it?
No, that's crucial. Good clarification. This 125% essentially wipes the slate clean. It replaces all those previous tariffs on Chinese goods. It's the comprehensive rate now.
Okay, comprehensive, but obviously much, much higher.
Extremely high, yeah. And China's immediate response, a statement vowing to fight till the end. So they're digging in.
Fight till the end. That's strong language.
It is. So the key takeaway here is a really dramatic shift in the U.S. trade posture towards China. Much more confrontational.
So what's the thinking behind such an aggressive move?
Yeah.
Why this massive jump now, and why zeroed in on China?
Well, one argument we saw coming from someone described as doing business in China was basically that the 104% just wasn't enough. It wasn't working.
Not having the desired effect.
Apparently not, in their view. They actually suggested something closer to 400%, believing China just doesn't play by the standard international trade rules. The idea is that small steps weren't going to force any real change.
Okay. And we have heard these types of arguments before. Can you break down the specific complaints? What are the main accusations against China that are fueling this?
Sure. The core grievances, you hear them repeated often. Not following WTO rules for decades, engaging in unfair practices, things like restricting access to their own market while benefiting from others.
Right.
Then there's intellectual property theft. That's a huge one. Companies feel their innovations are just copied. Also, the difficulty foreign companies face trying to navigate the legal system in China, getting disputes resolved, and that issue of forced technology transfer, basically being pressured to hand over proprietary tech just to get market access. These are the big ones driving this hard line.
It really does paint a picture of, an economic relationship that many see as fundamentally tilted in China's favor.
Yeah, exactly. And there's another layer, a strategic one. Some argue the Chinese leadership needs high employment to maintain stability and, power.
Okay.
So the U.S., being such a massive consumer market for Chinese goods, feels it has leverage. Use tariffs to squeeze the economy, put pressure on for reforms.
It makes sense from that perspective.
But we absolutely have to note, China sees it very differently. Their view is that the U.S. is the one breaking WTO rules with these tariffs. So you have these two completely opposing interpretations of the situation.
A fundamental clash over the rules of the game. Okay, let's dig a bit deeper into these criticisms of China's trade practices. That term mercantilism popped up. What does that mean here?
Yeah, mercantilism in this context applied to China is basically an economic philosophy. The goal is maximize your exports, get your goods out into the world, while strictly controlling and minimizing imports coming into your country.
So sell as much as possible, buy as little as possible.
Pretty much. Create a big trade surplus, build up national wealth and power that way. The accusation is that China actively seeks access everywhere else, but puts up all sorts of barriers at home.
Right. It's not just about selling things. It's seen as a strategy to shape global markets for China's benefit, maybe unfairly.
That's the argument, yeah. It's perceived as deliberately tilting the playing field.
Okay, so what are some real-world examples of these barriers China supposedly puts up?
Well, some are very obvious. Think about major global social media platforms, YouTube, Facebook, Instagram, banned in China.
Right.
That immediately cuts off huge avenues for foreign digital businesses. And then, like we touched on, the requirement in many sectors for foreign companies to form joint ventures with Chinese partners.
The forced partnership thing?
Exactly. And that often comes with strings attached, sharing your technology, giving up equity. It's presented as the price of admission to the market.
Yeah, you can see how that would worry foreign companies about fair competition protecting their IP.
Absolutely. And that IP theft issue keeps coming up. Constant allegations that Chinese companies, sometimes even with state backing, systematically copy or steal technology, especially from American firms.
Like doing all the hard R&D work yourself, only to see someone else copy it cheaply.
Precisely. And the example used to illustrate this was Tesla and BYD.
Yes. Tell us about that one.
Well, the narrative presented is that China welcomed Tesla in, gave them favorable conditions to build a factory, maybe hoping to kickstart their own EV industry.
Right.
But then, the allegation goes, BYD, a Chinese EV maker, got significant government support and essentially managed to replicate key aspects of Tesla's technology.
And now BYD is a huge competitor.
Huge! Reportedly surpassed Tesla in sales volume within China. So the concern is that foreign tech is used to boost domestic rivals, potentially undermining the original innovator.
It definitely creates a perception of a system that's, well, not exactly a level playing field for outsiders in China. And it seems the U.S. isn't alone in feeling this way anymore.
That's a really key development here. You're seeing a definite shift in tone from other major powers. The EU commissioner, for instance, made a pretty pointed statement, called China a key enabler of Russia's war.
Wow, okay, so this goes beyond just trade disputes for the EU.
Way beyond.
Yeah.
The concern is that China is supplying Russia with dual-use goods, things, with both civilian and potential military applications, which helps Russia sustain its war effort in Ukraine.
Dual-use goods. Right.
And there were also reports mentioned about North Korean troops, even military gear, allegedly showing up in Ukraine, with suggestions of Chinese support behind the scenes.
That adds another layer entirely.
It does. And one more piece. Reports that Houthi rebels in the Red Sea might be giving preferential treatment, like safer passage, to Chinese and Russian ships. All this feeds into a growing unease about China's broader geopolitical role and alignment.
That's a serious set of accusations, much bigger than just trade imbalances.
It really is. And it led the EU commissioner to say something quite stark, that bringing China into the WTO in the first place might have been a mistake. That signals a deep disillusionment.
A mistake?
Yeah.
And India. Are they echoing these kinds of concerns too?
Yes, very much so on the trade front. India's commerce minister basically mirrored a lot of the U.S. complaints, said China's growth was fueled by unfair trade practices, lacked transparency, and came at the cost of fair play.
So a growing consensus then?
Seems like it. There's a rising feeling among these big players that relying so heavily on cheap Chinese manufacturing without ensuring fair practices and transparency has had long-term negative consequences.
Okay, so it feels like a convergence of issues, trade, IP, geopolitics, all bringing China under this intense spotlight. Now let's shift back to the U.S. strategy slightly. Huge tariffs on China, but we also heard about a pause or lower rates for other countries. What's behind that difference?
Well, President Trump himself sort of alluded to it, saying things were getting a bit yippy, suggesting maybe some pushback or concern about the impact of broad tariffs everywhere.
Domestic concerns too.
Definitely. You had prominent business figures like Jamie Dimon publicly worrying about the bond market tanking or even triggering a recession if tariffs hit too many countries too hard. So yeah, domestic economic stability was a factor.
So not just about China, but also managing the fallout at home.
Absolutely. And it seems figures like Dimon and especially Treasury Secretary Scott Bessent were influential here. Bessent reportedly pushed for a more focused strategy.
Focused how?
Concentrating the heavy tariff pressure mainly on China while actually easing up on allies, it looked like a conscious strategic choice. Isolate China economically, but strengthen ties with other partners at the same time.
So more geopolitical calculation than tariff policy now, less of just a blanket approach.
Exactly. The underlying idea seems to be shifting away from China as the world's main factory floor and encouraging production in allied countries instead. You heard terms like Canada and Mexico becoming America's workshop. It fits that bigger picture of trying to decouple strategically from China in critical areas and build supply chains with friendlier nations.
Right, that makes sense. A shift to a very China-centric pressure campaign. Now, Scott Bessent, you mentioned him. As Treasury Secretary involved in negotiations, his view must be quite telling. What's his take on China?
He's very blunt. He described China as the worst defender in the international trading system, points to what he sees as a deeply unbalanced Chinese economy.
Strong words.
He argues China is the main one escalating the trade tensions, and he actually warns other countries against getting too closely tied to China because of these issues.
Any specific analogies he used?
Yeah, he had a quite vivid one. He compared China's export machine to the enchanted Bruins in Fantasia, carrying endless buckets of water just relentlessly flooding global markets. His point is that their economic model, as it stands, is unsustainable and disruptive.
Wow, okay. That paints a picture. Now, beyond tariffs, there was also talk about Chinese companies listed on U.S. stock exchanges. Another pressure point.
Yes, that's another angle Bessent brought up. He basically said delisting these Chinese stocks from U.S. exchanges is something that should have happened sooner.
Why? What's the core problem there?
Transparency, or rather, the lack of it. The main issue is that the Chinese government, the CCP, consistently blocks U.S. regulators from doing proper audits of these Chinese companies listed here.
So American investors don't really know what they're buying.
That's the risk, exactly. They're operating without the same level of verified financial information you'd expect from a U.S. company. The Evergrande situation, the giant property developer with massive debt and alleged fraud that Chinese regulators apparently missed for years, is often used as a prime example of why this lack of oversight is so risky.
Right, that rings a bell. Huge story.
The fundamental argument is that these Chinese companies get access to U.S. capital markets but don't play by the same rules as U.S. companies. It puts American investors at a disadvantage and raises serious questions about market integrity.
It really does sound like a multi-pronged strategy, hitting China on trade, investment, transparency, exerting pressure from many sides.
I think that's a very fair assessment. The big tariff hike plus this talk about delisting stocks, it represents a serious upping of the ante in this whole economic confrontation.
Yeah.
The focus is undeniably, intensely on China right now, trying to force changes.
Okay, so let's try and pull this all together. We got this massive tariff increase aimed squarely at China. We're hearing growing worries internationally from the EU, from India, about China's trade behavior, its geopolitical moves, and we see the U.S. shifting its strategy to really zero in on China, while maybe trying to solidify alliances elsewhere.
Exactly. You've got this fundamental clash brewing, or maybe boiling over now, between China's economic model and ambitions and the way the established international trade system is supposed to work, according to many.
Right.
And what we're seeing now is a much stronger, more coordinated pushback from major global players. They feel China hasn't held up its end of the bargain and it's causing problems globally. These latest moves are about trying to address those long simmering concerns, very directly targeting China's role.
It really does feel like a significant turning point, doesn't it? With China right at the heart of it. So maybe the thought to leave our listeners with is this. We all know how interconnected the global economy is, right? So what happens next? What are the potential ripple effects, the intended ones, sure, but also the unintended consequences of putting this kind of intense focus and pressure on China? It's not just about the U.S. or the EU or India. This could reshape international trade, shake up supply chains globally, and maybe even shift our own understanding of how the world works economically. Definitely something to keep a close eye on.